Morning, Market Chameleons. Thanks for joining us for Thursday's edition of the Pre-Market Show. We're waiting for Dimitri to come on. Hey, Dima, how you doing this morning?
Good morning, Will. Good morning, everyone.
Great to see you.
Yep. Get the morning started. Had a couple earnings out today, so I was just taking a look at them, how stocks are performing.
Should be exciting to look at. Hey, everyone who's joining today. There's some great questions out there. I'll try to get them in front of Dimitri. Sometimes I miss them. Make sure I don't get to your questions, they are all super important. I'll put a link out. You can put them in the forum, and our crack staff, which is basically Dimitri, gets in there and answers those questions. So that's a super helpful way to get questions answered. Also, if you're new, put all your questions into the chat and we will try to get to them. And make sure you actually subscribe to our channel. You'll be alerted to any new videos that are put out there. With that, Dima, you ready to get started?
Yep, let's go. Before we get started, let's just put up that disclaimer, Will, really quickly, everyone. Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing our ideas. If you need professional help, contact your broker. They should be able to help answer your questions, provide you with guidance. That's what they're there for. There's the disclaimer.
Excellent. What are you seeing this morning, buddy?
Let's get started. I'm going to share my screen really quickly. Let me know if you see it.
Yep, it's coming up. It's coming up. There it is. Perfect.
Okay. Good morning. So this, if you guys are joining us for the first time, stocks that are actively trading in the pre-market hours before the market opens. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I know we've had a bunch of earnings coming out yesterday after the close, today before the open. So some of these are reacting now to their earnings releases. I'm going to quickly first filter out stocks with higher market cap, so $20 billion market cap or higher, to see what's going on there. And I'm going to use this filter over $20 billion market cap. And here we go. So we got a bunch of them today. ALGN, that's up almost 25% in the pre-market hours. They reported earnings after the market closed yesterday. So that's a reaction to that news. LVS, that's a casino, Las Vegas. They're up 5.8%. They also reported earnings. That's what that little E is telling us. So yesterday after the market closed, they reported. Tesla, they reported earnings. They're up 4.7%. And you said something interesting to me today, Will, with Tesla. And what did we say? You said that you read some
well, our man, Jake, Dr. Chameleon, has been saying forever that there's so many overvalued companies trading in the marketplace that have no revenues. And the front page of the business section of the journal today talks about, basically they're the most publicly traded companies with no revenue of all ever. So it's greater than
electrical vehicles.
And electrical vehicles make up a big chunk of it. There are also a lot of biotechs that have no revenue, but the EV market is just exploded with these SPACs. And there are no revenues other than Tesla is revenue, positive. And interestingly enough, very few people talk about.
They don't have. Yeah, sorry. What were you saying?
Oh, I was gonna say. GM, actually, when you read through this stuff, and a lot of the chameleons have been talking about this for months now, they actually have a EV technology that is, basically second to Tesla, and their stock is not priced like a lot of these EVs. So just interesting to take a look.
That's interesting. Well, why don't we just take a look at that then, since Tesla reported earnings. Let's take a look how it behaved historically, and then I'm going to take a comparison look in that group to see how Tesla, General Motors, and other car manufacturers compare relative to each other. Because right now I'm working on fundamentals anyway that we want to release to the chameleons, and I'm going through different valuation models. So I'm just going to take a quick peek from the high level how these car manufacturers compare to each other. So Tesla here closed at $422.64 in the pre-market hours. They're trading at $441.96. That's up 4.6%. I believe, like, some of the good news, they still said that end of year they're planning to deliver 500,000 vehicles. I think their operation margins have increased as well. So a couple good news out there. Of course, it's been rallying into that, before the earnings release. So maybe a lot of that good news was already priced in. Anyway, in the pre-market, the VWAP $442.78. So it's trading right around that pre-market VWAP. The range for in the pre-market hours, as low as $436.95, as high as $446. So not a very wide range for a $400 stock, about $9 in either direction. This is what the chart looks like in the pre-market hours. So here in the morning, it looks like it was a little bit higher, trending down a little bit. I'm going to take a look at what it usually did around earnings, and then we're going to take a look at the fundamentals to compare some of the fundamentals, Tesla versus other stocks within that group. So here's the earnings history in the last 12 quarters. After Tesla reported earnings, this is what it looked like. 55% of the time in the morning, it gapped higher, 45% lower. Average return was 3% on those gap moves. When we look at the volatility of the gap move, that's in either direction, plus or minus 7.4% move in either direction compared to today's 4.6%. So that looks like, a little bit below its average move. After the opening, this is what it tended to do. From the open to the high of the day, the average move was 2.4%. From the open to the low of the day, the average move was down 4.8%. So a little bit, to me, it's a little bit weaker, a little bit when to the downside, the magnitude of the move is higher than the magnitude of the move to the upside. By the end of the day, from the open to the close, it looks like almost 50-50, 55% of the time it was lower, 45% higher for an average move of negative 1.8%. So that's what it looks like to me, from a historical perspective. But it does look like coming out of earnings, it had some pretty decent gains. Like you could see here, 2-day gain, 3-day gain 1 week. Those gains, trump the average gains like right after the report. So just waiting for the report, reading the news, coming out of it, the risk reward looked better to me from the long side. Waiting for the news to come out and then deciding the day of earnings. Let's take a look at the fundamentals. So I'm going to take a look at similar stocks here, and this is Tesla. I'm going to first I'm just going to sort what's moving in the pre-market hours. So this here, similar stocks, is looking at all the stocks that are in the auto manufacturing industry. Okay, so this is the group 18 stocks in here. I have, let me see what's moving. So Tesla, I have it up top right now, moving up 4.5% in the pre-market hours. So a couple stocks might be moving up in sympathy with it. What is this? Tata Motors, LI. So a couple stocks here that are also up in the pre-market hours. This one, a couple of them are down. So that's kind of what's going on in the pre-market hours in that group. Really quickly, let's just take a look at a 6-month return. So NIO in that group in the 6 months did the best. Then we got Workhorse Group. Do you know that stock, Workhorse Group? That sounds familiar.
I think they're another, I think maybe undercarriage. They are a manufacturer of the technology.
As well, like
yes,
also an electronics. So that's up. You could see here 689%. NIU up 330%. Then we got Tesla down here 207%. So that's on the 6 months basis. Even though we hear about Tesla, you could see a couple of them, especially this one, like really blew it away in the last 6 months. Let's take a look really quickly over here. These are stocks that are kind of correlated to it. It's running a correlation to Tesla to see on a week-to-week basis if there's anything, highly correlated to Tesla returns. And here, this is the highest one, race Ferrari, but even there, it's like, 0.29. That's not very significant. Let's take a look at the fundamentals, and let's see how Tesla compares. Let me sort this first. So I have Tesla up top. I sorted by the biggest pre-market movers. So here's how Tesla compares to the overall group. We see here PE 1020. The median PE is 34 in that group, and a lot of them don't even have a PE because, like you said, Will, they don't even have earnings, so we skip that. This is the median PE of those stocks that actually have earnings.
Well, some don't even have revenues, D.
Some might not even have revenues,
Yeah.
so we can see here some blank ones. Here, price to sales. So this is a different way of looking at the valuations. If there are no earnings, the next thing we could do is look at the revenue. How much sales are they generating? So price to sales, we see here Tesla trading 15.7 times its price to sales ratio compared to a median of the group of 8.31. And I'm just going to take a look really quickly because we mentioned General Motors, which is also in the same space. They're starting to produce electrical vehicles. So we'll see if they actually are able to. Obviously, they're not. People don't love them as much as the Tesla people really love their vehicles. But we'll see. They do have very good technology. I think they're also working on hydrogen engines as well, right? The engines that run on basically water, they produce. They don't. It's a different, very interesting technology that might even be competing with the batteries. But General Motors, here we go, PE 34 versus Tesla's 1000.
Hey, D, just to confirm this fundamental data you're going from, Jake is asking, is the data from last quarter?
Yes. I have to take a look at the data we're getting. This data is coming from, we subscribe to Morningstar data. I'm not sure if they updated this Tesla right. I don't know how fast they do it. I have to take a look, but this might be from the previous quarter.
Cool.
Yeah, I'll have to take a look. I'm not sure if it's I don't think it's instant, because when you're importing data, even from the SEC filings, it takes time. I think there's manual work involved in that. It's not automated like that. They normalize the data, but it might be from last quarter. It might be from the previous quarter. Anyway, here Tesla. This is the price to sales compared to General Motors. So 15.7. 15, they're basically the market cap or the price of the stock is trading almost 16 times the amount of sales that they're generating compared to General Motors 0.44. The price to book value, Tesla is 40 times its book value compared to General Motors 1.3, and you could see the median here is 3.09. Gross margins, this is another thing people look at here. This is where Tesla does pretty good, I think. Their gross margins around 20%. In General Motors, 7.6. The median is 11.9%. And here's, I think, where Tesla really blows everybody away is their revenue growth. So the rate of growth in the last 5 years on an annualized basis, 50.4%. compared to the group 2.6%. And you can see General Motors is actually negative revenue growth in the last 5 years. Net income, Tesla in the last 5 years, we don't have a net income because I think a lot of those years they haven't been earning money, but they are reinvesting it to grow. Here, General Motors, 11.3%. And the group as a whole, net income growth in the last 5 years, on average, 5.2%. So really quickly, That's just the way to look at things from a valuation basis, growth and margin on a high level. Of course, you could dig down deeper, like Jake was saying. You could go right into the SEC filings, read the management notes, and what else is going on within that company. I think another thing, Tesla, what did they say, that they're going to start producing a car that's like under 30 grand eventually, right? And they're working on a battery that's going to have a longer lasting life.
Yeah, well, they're going to have to. Tesla's really the one that, if the infrastructure needs to change, I mean, solar, and they're in that entire space, the batteries, you know, it's going to take a huge lift if the entire world eliminates the combustible engine, right? You know, and he's involved in the entire infrastructure. So,
and he's a vision. He's the founder of the company, and he really is a visionary. It's amazing the things that he even talks about. I was watching YouTube videos. He's building like multi-level tunnels underground. He is, sending people to space. So,
yeah, and he's also sleeping on the production floor. I mean, the guy is a workaholic, a visionary, and he actually gets his hands dirty producing the product. He's not like this crazy salesman like the founder of Nikola. He really is he's like Edison, right? I mean, I guess that's the closest comparison.
Yeah, no, he's amazing. The things he's talking about sound even like science fiction. And when even the tunnel, about the tunnels he's building, like to transport cars.
He built one in Vegas, and he'd like to basically start with a tunnel, but then he has a whole concept for a tube-driven travel network that works under the same principle when you go to the bank, and you're in your car and you put your money, your deposit slips in, and it sucks through the vacuum.
Right.
To do, that's the speed of that move is incredible. So if you could do that with human travel, you could move people, from Philadelphia to New York in, 30 minutes or something incredible.
Right. Well, and that would just transform our entire economy, right? Yeah. When you're dealing with transportation of goods, transportation of people or data, that any type of innovations there can really transform the entire economy. Yeah. So a lot of excitement around Tesla. Let's take a look at what's coming up in the earnings. Did you have any questions, Will, before I move on?
No, Jake wants us to move on quickly. He doesn't like this. He doesn't like this conversation. He wants some earnings information.
Okay. Let's take a look at upcoming earnings. So these are stocks coming up with earnings in the next 2 weeks. I'm going to filter out stocks that have trade at least 5,000 contracts or more on average per day. Those are 5,000 option contracts. Let's take a look. So we have here STX, that's expected to come out today after the market close. Here's the implied move. So that's basically what the straddle is pricing the move to in either direction, 6.1% up or down. That compares to a 4-quarter average move of 5.6% and a 12-quarter average move of 4.8%. The high move on that in the last 12 quarters was 12.6%. COF, that's Capital One. That's expected today after the market close. The straddle's pricing in a move of 4.8% in either direction. That compares to a 4-quarter average move of 3.6% and a 12-quarter average move of 3.5%. A high move on that, 6.7% in the last 12 quarters. Intel, that's today after the market closes well. That's looking at an implied move of 5.5%. That compares to a 4-quarter average move of 8.2% and a 12-quarter average move of 6.6%. The high move of that is 16.2% in the last 12 quarters. So that one's actually right now implying or pricing in estimating below those 4-quarter average moves and 12-quarter average moves.
Hey, D, we had a question previously, and I don't know if you ever figured this out. It was from, I think, Mike McRae, but we got a couple questions around earnings while you're on this.
Yeah.
Mike McCrae was asking previously, how do you, he wants to screen for weeklies around
Right.
earnings and opportunities there. Is there a way you can easily do that?
Yeah, so I did find a way after one of the shows. I did find a way you can do that, and I'm going to come here to the under the options. Sorry, under the screeners, we have this options by expiration, and basically this allows you to screen by any expiration, and like a lot of our screeners already allowed that as well. But in this situation, if you look at the expiration here, you could pick a weekly expiration, right? And the weekly expiration is basically that expiration that expires on the Friday, right? So this Friday is October 23rd, the following October 30th. So if we go here, let's just go to the next one, October 30th. So that's all the expirations, right, that are listed that you could trade expire October 30th. And I'm not sure, when do they start listing the weeklies? Is that on a Thursday? Because they have a rotation there. But whatever it is, right now, October 30th, so you see 568 different stocks that have options expire October 30th. If we want to see which ones have earnings coming up over here, we could just say, earnings coming up in the next 7 days. So here we have a list of stocks. Here are the earnings, and you could just kind of screen for them this way. So hopefully that is helpful. And you could actually, this list you could even download. So we got 146 stocks right now that have options that expire October 30th, and that there's going to be an earnings that covers that expiration. Hopefully that's helpful.
Yeah, that's great. We did have another question, and this was around earnings and events.
Okay.
Can you take this? This was from Mike H. And
okay.
He wanted to know, he wants to screen either events or earnings, and he wants to look for, all right, here it is. Good morning, Will and Dimitri. He wants to screen for edge where the expiration is before a company event such as earnings.
Okay, so let's take a look at, when you were talking about edge, we need one of these screeners, bull calls. We have all these different screeners with different option strategies. Let's just take, for example, I'll just take a bull put spread screener.
So you would have to decide, the trader, Mike H, would have to decide what strategy he wants to run going into this event. Yes,
exactly. Because what the edge and the win rate, it's calculated based on the strategy, right? So each strategy will have to have an analysis to see if there's a theoretical edge, like over here. So this here is looking at bull put spreads. Here we have the expiration. This is the spread, selling the 127.5 put, buying the 124 put. That's the market. So you would receive $2.50. We think it's worth theoretically $1.68. So if you're selling it above the theoretical value, that's where then you have a positive edge. If it's the other way, it would be a negative edge. This is the historical win rate. So every strategy would have its own analysis, and you open it up and then it will describe to you the analysis behind the strategy. But let's just say we wanted to look for something with edge. So I'm going to take a look right here on our filters for expiration. I'm going to first filter, show me any expiration that expires within the next 30 days. All the data is going to come down below. So this table will look for all the different stocks and combinations of put spreads, and list them below any option that expires within the next 30 days. So we'll have multiple expirations down here. So you could see here there's about 151,000 different spreads. Now let's look for theoretical edge.
Jake just put in that he's gone through every one of those, and there are at least 25 opportunities.
Well, there we go. So here we're just going to do a quick scan to show how to look for edge for spreads that cover a certain event or or earnings. So here, looking theoretical edge, at least 10%. You can put in 70%. Let's just put a theoretical historical win rate, 70%. Now I'm just narrowing down the potential opportunities. So we went from 151,000 to 13,800. Of course, that's still a lot. Let's take a look for expirations that cover earnings. So earnings has to be before expiration. We can do it this way. And this will look for, these are theoretical edge trades that for expirations that will cover earnings. So for example, here, Apple, October 30th expiration, that's going to cover earnings because earnings are October 29th. So earnings will come out before those options expire. That's how that works. Let's say you wanted just the company event. I'm going to unfilter this. Let's take out earnings completely. So I'm going to say earnings are either after expiration or show me stocks that have no earnings like SPY. So now we have 889,000. So none of these are going to cover earnings, but let's take a look for company event. So these expirations will cover some type of other company event other than earnings. So I'm going to say company event before expiration. So now I'm looking for theoretical edge, right? And there's a company event coming out. So I'm hovering over here, TSMC, what is that car manufacturer? They're going to have monthly sales November 10th. This expiration is November 20th. Let me just to narrow this down. Yeah.
Mike H said he's got it. Very good. But there's a lively discussion about an earnings that's after the market closed today and ALGN, and they all want you to take a look at it. So sorry to interrupt you. This was,
yeah.
I mean, I think this is actually another, we'll put this on the.
ALGN just reported earnings, right?
I think it's
25%.
All right.
This one, ALGN,
Yeah.
Technologies.
Yeah, it was
right
after the market closed yesterday. Yeah.
Okay.
Jake wanted to look back at it because he said it goes back to a trade he had on that became very painful. So
okay.
So I just maybe look at what the straddle was implying. Yes. I mean, this is what we were talking about, right? People who just sell a strangle, right? I don't know what it was pricing in the move, but I can imagine that it was less, and you didn't, if you didn't
right
protect yourself or define your risk, this is when you have a painful morning.
Right. So here I'm looking at, the options, they were predicting a move of 8.3% in either direction. The actual move was 26%. So way above, what that straddle was predicting. Historically, it's telling me that the options overestimated the move 62% of the time. And on average, the stock was on average, the options were predicting a plus or minus 9.1% move in either direction. And the average actual moves was 10.1%. So in other words, if you were doing this strategy in ALGN over and over and over again, on average, you lost 1% from selling the straddles, right? The buyer on average made 1% on the move. Sorry, on average, the differential between the actual move and the implied move was 1%. So there you have it. We're talking about that tail risk. You got to be careful.
That tail risk is real.
And you could see here, like even historically, like look at when it broke through. It broke through a lot. July 24th, the implied move was 9.7%. Actual move down 27%. Here we go, another one. The implied move was similar to today, 8.5%. The actual move was down 20.2%. So when it breaks through, it broke through by a lot, right? More than 2 times the actual move. So very volatile in the stock in ALGN. And then it's doing that same thing kind of today, 26% versus the expected move of 8.3% in either direction. Hopefully it was that it. We could take a look at the implied volatility here. So this is one way to, though, protect yourself from a very big move is people do play the calendar spreads because you're hedged against the move. and you're looking just to take advantage of an potential implied volatility crush. So here we see ALGN, on average, the implied volatility day after earnings is down 30%. So this is looking at a 30-day constant maturity, not the front month, but the 30-day constant maturity. That's on average the day before, the implied volatility was 54.5%. Day after, on average, was 38%. The implied volatility was 38. 5 days later, the average implied volatility was 36.9.
Awesome, D.
Yeah.
They're very thankful for that.
Yeah, and you'll see a lot of people start out, almost everybody, 100% of the people who start out playing earnings always play the move. 2 years, 3 years later, the ones that are still around are playing like calendar spreads or iron condors, because they need to, until they start experiencing, and everybody does it, everybody experiences this pain. We're no different. We've experienced that pain.
Yeah, well, that's why this chat is so nice, because people are discussing it. You and I are discussing it. I mean, we worked for Thomas Petterfy, who's the founder of Interactive Brokers, and I remember 2 years in a row, he was like, "Never sell." This was at the holiday party. Never sell penny options.
Never sell tail. Don't sell tail. Don't be careful selling. Selling options. It's very painful. But everybody, look, almost 100% of people who start playing earnings. First of all, I don't know why people even start out that way playing earnings. You're probably better off with doing spreads in SPY, before you get to the earnings. But everybody starts playing that movement, and eventually they feel this.
All right, buddy. I just missed the opening bell. I got to get in front of my computer. Sorry about that.
All right. Yep. All right.
Great
Thanks
job.
Hopefully,
thanks. Yep.
You guys
Sorry,
tomorrow.
Yep. Thanks for joining us, everyone. Remember to subscribe to the channel. Thumbs up are always appreciated. D, great job. Chameleon's in the chat. Great job. Have a safe trading day. We'll see you tomorrow. Bye, D.